Hi, Jonathan York, Bay Financial Partners, looking at investment markets. Trump chaos continues to play havoc with the US market. So after the tariff announcement on sort of Liberation Day, it's really just been a roller coaster for US equities. As Trump sort of flips and flops between tariffs, various sort of rates, and then that sort of ongoing trade war with China. Well, what was really quite interesting was that the market gave them a pretty stern sort of reality check when they started to see selling off of not just US equities, but treasuries and also the US dollar as well. Now, obviously, treasuries have a pretty major impact because, with Trump looking to pass his sort of tax plan, there's going to increase the deficit by conservatively sort of 3 to 4 trillion. Most people think it might be as much as sort of 5 to 6. He, of course, thinks it's only going to be 1 to 1.5. And then we've got his ongoing spat with Jay Powell and, really trying to force the Fed to cut interest rates when the Fed isn't going to cut interest rates when you've got potentially inflationary pressures coming through from the tariffs. And it just seems everyone, bar Trump and his administration, think that tariffs are going to be potentially inflationary for the US economy. So Jay Powell is seen as sort of a very calming influence. And once Trump started to attack him and really trying to even talking about trying to remove him, Treasuries took a really pretty big hit. And then in typical Trump style, he came out sort of yesterday and said, no, I'm not looking at removing Jay Powell and never had any intention of it. Whereas last week, all he was talking about was sort of, having a go at him, calling him a loser, too slow, and, just saying, can't wait to get rid of him. And believe me, if I want to get rid of him, he'll be gone pretty quick. What he doesn't seem to realize as well is that the president doesn't have any powers to remove the Fed chair. And then a further indictment on Trump's policies. The IMF came out with their latest sort of global growth forecast, and they are down. And they've lowered the US global growth down to around 1.8 now from 2.7, which was only sort of established around sort of 3 months ago. Trump took over a pretty decent US economy from the Biden administration, and when in the space of sort of 2 to 3 months, it has really trashed it. And supposedly there are lots of countries there sitting waiting to make deals. Navarro is talking about making 90 deals in 90 days. But as yet, they can't name any of the countries that are there with deals on the table. And, it's all sort of very vague in terms of what is actually taking place. And all the time, the US economy seems to be struggling. Inflation, latest inflation data was slightly better than anticipated, but you have to remember that was pre-tariffs. And what's sort of quite interesting as well is that, while Trump appears to be sort of upsetting, just about every trading partner the US has because of the, trade deficit, which that doesn't necessarily mean they're being ripped off. It just means that the US consumers are consuming more than they can produce domestically. And meanwhile, Xi Jinping from China is going around on a pretty major charm offensive, having meetings with Japan, Taiwan, and other Asian countries to try and shore up those trading relationships. And certainly rates in the US are sort of holding around sort of current levels, 10 years at 439, and the 2-year is 382. But again, sort of 3 odd weeks ago, 10-year was closer to 4%. But as soon as Trump came out about talking about sort of removing Powell, they went up to 450 very quickly. Now, oil's come back a little bit on potentially sort of further sanctions against Iran. That's currently 62.20 and change. Now, in the UK, still looking for the Bank of England to cut interest rates down to 4.25 at its next meeting in May, currently 4.50. But also as well, the latest IMF sort of growth for the UK was down on the back of, sort of potentially Trump's tariffs. UK growth now projected to be around 1.1% for this year. And that's down from around 1.6 earlier on. And likewise for the Euro region as well, the IMF have downgraded their growth down to 0.8 for this year, down from 1.2, and potentially they're talking about only one further cut from the ECB. Although looking at the ECB sort of projections, the ECB sort of predict at least 2 further cuts this year. A similar theme for Australia as well, obviously with the tariffs, and really just waiting to see what's going to happen with those tariffs. Obviously you've got the election as well, and at present it looks like Albanese is just going to sneak back in. But also as well, yet to see the sort of real cost of the cyclone and the damage to sort of Queensland coast, which will run into billions of dollars. Now, the latest CPI data in New Zealand was a little bit firmer than the previous quarter. Came in at plus 0.9 versus plus 0.5 in the previous quarter, and that gives a year-on-year figure of 2.5 versus 2.2. But that still shouldn't be enough to dissuade the bank from cutting interest rates at its next meeting in May. Because with the OCR at 3.5%, it's 2% off its peak, and now looking at potentially a bottom for the OCR of around 2.5%. And although tourism numbers held up pretty well over the summer months, just going to be interesting to see how the economy now performs over the next sort of 3 to 6 months. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. I look forward to speaking to you soon.